Solid position of the US dollar has wavered today. Its value against 6 major counterparts experienced the largest since-day correction since early August. The reasons for the decline of the American currency came out of nowhere. US financial markets are closed today for Thanksgiving Day, and the shortened trading session is scheduled for Friday. So, trading volumes in the US are expected low during these days. As for other currencies, they are trying to take advantage of this temporary lull. First, expectations are rising in Asian markets that the Bank of Japan will raise interest rates at its policy meeting in December. This move could notably reinforce the yen and reshape its position in the US dollar index. However, the main competitor to the dollar remains, of course, the single European currency. It could also be the main reason why the US dollar index is extending its decline. The issue lies in the fact that the ECB President Christine Lagarde sent the message about the need to reconsider future rate cuts. Previous discussions hinted at a rate cut at a nearly early upcoming meeting, so any change would likely signal a potential pause. Moreover, SCHNABEL, a member of the European Central Bank's Governing Council, also opposed to fast rate cuts, emphasizing that such measures would not address the Eurozone's economic issues. The December scenario where Europe lowers interest rates and the US pauses is no more realistic. This scenario was one of the catalysts for the prolonged rally of the US dollar's six-currency index. Now the index may shift to a full-fledged correction, trading within a narrow range of 106.10 to 106.40. Interestingly, Christine Lagarde also commented on Donald Trump's earlier statements about rising trade tariffs for Europe. She believes that the lack of specifics regarding the potential level of European tariffs could indicate that the US is open to negotiations. As a part of her argument, Lagarde referred to Trump's own slogan, America First. She remarked, "It's hard to make America great again if global demand falls due to the trade tariffs." With a strong support, the euro has rebounded from the two-year low of 1.0460 reached last week. The euro-dollar pair broke through the important resistance level of 1.0510 once again, but the Wednesday rally failed to push the instrument above the key resistance level of 1.0600. As a result, the euro is trading today, consolidating within the range of 1.0531 to 1.0572. However, some technical indicators signal potential upward reversal for the euro-dollar pair. In this scenario, the next resistance levels could be 1.0580 and 1.0640. Meanwhile, the area of 1.0565 to 1.0580 might act as an upper border of a short-term bullish correction. Nevertheless, the broader outlook remains bearish. If this scenario unfolds, the key support levels will likely be at 1.0490. The further forecast of the euro, it would be wise to pay attention to the Eurozone consumer inflation reports scheduled for release on Friday. Find detailed information about the release times and the impact of economic statistics on popular forex instruments in our traders' calendar. Unlike the currency market, oil prices are more responsive to political news than economic statistics. Today, this trend was confirmed. According to reports from the U.S. Department of Energy, crude oil inventories in the U.S. storage facilities have decreased by 1.8 million barrels last week. In theory, this should have led to a significant rise in oil prices. However, that hasn't happened. Brent crude, for example, is still trading within a range similar to 3 days ago, between $72.10 and $73.50 per barrel. One possible reason for the sluggish growth in oil prices is that the market has not yet fully absorbed the recent easing of tensions in the Middle East. If this is the case, oil prices may consolidate around $73 per barrel, though the end of the current week, especially given that trading volumes are likely to remain subdued due to extended holiday weekend in the United States. At the same time, markets are waiting for the OPEC meeting, now postponed to December 5. In any case, concerns about potential disruptions to oil supplies from the Middle East have already resulted in a roughly 3.5% drop in oil prices over the past week. The Russian ruble is hitting rock bottom due to its nosedive. Yesterday, the Bank of Russia decided to temporarily hold currency buying in the domestic market. However, this move appears to have had little effect, as the ruble is still showing dismal performance. Notably, the decision was announced on a Wednesday beyond trading hours, meaning the market could react to this news later today. Additionally, it makes sense to turn attention to the largely optimistic macroeconomic data. Specifically, the unemployment rate fell from 2.4% to 2.3%. Industrial production in Russia jumped from 3.2% to 4.8%, much stronger than the estimated 3.4% increase. However, retail sales dropped to 4.8% instead of slowing from 6.5% to 6.1%. Nevertheless, the figures remain quite impressive. Therefore, there are solid grounds for a significant upward correction in the ruble. That's all for today. We monitor developments in the financial markets. Subscribe to our channel and stay up to date with the latest news. See you online soon.